Trend-following trading system, quantitative trading in Python. In a previous post, we demonstrated the mean-reverting and trending properties of SP500. We subsequently developed a trading system based on the mean-reverting behavior of the index. In this installment, we will develop a trend-following trading strategy. We continue to use simple moving averages as noise filters in order to generate buy and sell signals. Recall that the SP500 index is trending in the long term, therefore we will use a long-term moving average along with a shorter one. The trading rules are as follows. If 3-day simple moving average greater than 200-day simple moving average, buy $10,000 worth of stock. Exit if 3-day simple moving average less than 200-day simple moving average. We downloaded SPY data from Yahoo Finance and implemented the above trading rules in a Python program. The picture on our website shows the equity line of the strategy. We note that using the 3 and 200-day simple moving averages, the strategy is overall profitable. Next, we proceed to test the robustness of this system. To do so, we vary the length of the second moving averages, 200 days in the above example. The graph on our website shows the total P&L as a function of the length of the second moving average. We observe that the overall profit remains positive when we change the length of the second moving average. This would indicate that the strategy performance is stable in this parameter regime. In summary, we developed a simple trading strategy based on the trending property of the SP500 index. The strategy appears to be profitable and stable. Go to our website to download the Python program and data file.